The stock markets tumbled again on Friday. Fears of a banking crisis resurfaced despite massive financial lifelines thrown at embattled lenders to prevent contagions across the sector. Financial Times claims Switzerland's largest bank, UBS, is in talks to buy all or part of Credit Suisse. Investors have reportedly wiped nearly $500 billion from the value of bank shares globally. It represents the worst rout for the financial sector since the coronavirus pandemic. Markets had rallied on Thursday after Wall Street titans, including JP Morgan, Bank of America and Citigroup, pledged to inject $30 billion into First Republic Bank. Credit Suisse had also rebounded after it said it would borrow up to $54 billion from the Swiss Central Bank. But shares of First Republic Bank and Credit Suisse dove back deep in the red on Friday. The US lender slumped 33% and Switzerland's second biggest bank dropped 8%. Investors are worried about which road Credit Suisse will take to try and restore confidence. On Wednesday, Credit Suisse's biggest shareholder said it would absolutely not up its stake in the bank for regulatory reasons. The Swiss National Bank came to the rescue with Credit Suisse, announcing it would borrow $54 billion to reinforce the group. After recovering some ground on Thursday, Credit Suisse shares closed down 8% on Friday. Analysts are pitching for more drastic restructuring, closing the Swiss giant's investment banking arm, or even a takeover by a rival. Switzerland's second biggest bank is one of 30 deemed of global importance to the international banking system. As per the Financial Times, UBS is in talks to acquire embattled Credit Suisse. There is no guarantee of a deal. The Swiss Central Bank reportedly wants the lenders to agree on a simple and straightforward solution before markets open on Monday. The idea of a takeover by UBS was also floated this week by analysts at JP Morgan, calling it the most likely scenario. The idea of Switzerland's biggest banks joining forces regularly resurfaces. However, it is generally dismissed due to competition issues and risks to the Swiss financial system's stability, given the size of the bank that would be created by such a merger. In the United States, banks have stepped in to save First Republic Bank over fears it could suffer a run of withdrawals by customers. There are worries that First Republic Bank would follow Silicon Valley Bank and Signature Bank, which went under last week and fueled fears of another financial crisis. The Fed's discount window allows banks to quickly access funds, providing them with liquidity when customers withdraw more deposits than expected. Analysts say the record figure is an indication of stress in the sector. Investors will focus next week on whether the US Federal Reserve will stick to its interest rate hike policy to combat inflation. On Thursday, the European Central Bank stuck to its plan to lift rates by a half percentage point despite the turmoil. WION is now available in your country. Download the app now and get all the news on the move.